Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of the 4Imprint Group. This is in the London Stock Exchange under the ticker symbol 4, as in the number 4 spelled out. So let's get started. Now, what do they do? So basically, what they do is they make promotional materials. So if I'm a company and I want to make pens, for example, if you go to the bank and you see that they have pens with the brand of the bank there, 4Imprint probably made them. It's really likely if you go to a lot of events and just grab whatever swag or little things that companies give out, that you actually have something in your house made by the 4Imprint group. They do tote bags, they do all sorts of little trinkets like that, notebooks, etc., that companies can give away or that they can give their employees or that they can use for promotional events, all of that stuff. Most of their audience is in North America, and then the UK and Ireland making up only 2% of the pie. So even though they're listed in London, they're very much a company that earns in dollars. Okay. So the income statement here is showing that they are declining a little bit in terms of revenues. Um, the market conditions are volatile. We know that job growth is not that much. So, for example, if the economy is not doing all that good, companies may want to cut costs, so they're going to cut the free pens. I do think, or if they're hiring less, then they're giving less free stuff to those employees. If they're doing less economic activity, then there's less company related events, maybe. So it's all cyclical in a way. This will be very correlated to how good employment is doing in the economy. And if hiring isn't that great in the US, you can definitely see some revenue going down. However, their profits are holding steady because of price adjustments, and their suppliers didn't really increase their costs. Their marketing costs are down, which is lovely. It's usually very rare to see companies lowering their marketing costs. So I'm actually pretty happy to see that. And just selling and admin going up. Operating profits still up, though, the operating profit margin going up. And yeah, basically, you have profit after tax, which is up a little bit despite revenue being down a little bit. We do like to see that. We do like to see margins holding steady when perhaps revenue is not. So, very important to note. Now, in terms of cash flow, they are a free cash flow positive company, and you love to see that. If you see the cash flow here, the free cash flow for the first half of 2025 is not only higher than the cash flow for the first half of 2024, but pretty well on the way to even matching the full year cash flow for 2024. So, yeah, they generate a whole lot of cash conversion of 118% of operating profits. So that's pretty great. And in general, not much capital expenditures, at least in this period. You can expect this to change. You don't want to forecast that they'll have very low capex every single period if you're looking to forecast in the future. But in general, very good. And also, you don't have much stock-based compensation that they're giving. I think it's share option charges here. So this is lovely because otherwise they would be diluting you without really showing you on the balance sheet. So we love to see this. The market in general, industry sales are declining, but they still are receiving a bunch of orders. So they do have existing customers here kind of staying, but not at the level that you want to see. And then you have new customers driving a little bit of extra growth here. Most of their growth recently has been from new customers being acquired rather than existing ones. And the question is sometimes, how much more customers can you actually acquire? Especially when a lot of their new customer acquisition tends to come from just simply Google search. And if Google changes their algorithm, you're kind of vulnerable to that. But in general, this industry seems to be growing a little bit over time, but with a lot of competition too. It's pretty easy for me to start making branded pens or branded shirts or branded water bottles and competing with 4Imprint. So that's important to note as well. If we look at the long term picture, they're a pretty steady revenue grower, except for 2020 for obvious reasons. And their operating profit tends to also be very steady. The margins, especially, are somewhat steady at the very least. Um, And their return on invested capital is massive, absolutely massive, and you love to see that. In general, it's very rare to see ROIC that's this high at any point with any companies. So, yeah, very impressive, honestly. So, you want to see that. You want to see steady margins even when revenue compresses in the bad years, which they managed to do in 2020 more or less. And even though this has declined right now, if you see increasing margins with decreasing revenues, this bodes well for when revenues do finally increase eventually, and you see that cyclicality. So I'm going to do a quick discounted cash flow model. I'm going to say cash flow goes down actually, because I want to account for decreasing revenue, for the fact that they may have expenses that they're not realizing, or for an economy that's hiring less, doing a little worse than maybe anyone expects. And from there on, I'm pretty much going to be grow them flat until 2028. And then they're going to grow at a 2% perpetual growth rate. Very, very modest. And then my required rate of return here is 12%. It's going to be 1% more than my usual to account for just extra risk. And then divided by the total number of shares out, it would be worth about 47.82 Great British pounds per share. But if you subtract the net debt, it would be about 51.3 Great British pounds per share. This means they have net cash, actually. You're subtracting a negative number because they have cash. They don't really have debt, which is wonderful to see. So, yeah, 51 pounds and 30 pence here. Let's compare it to the actual price, which this is on in pence. So you move the decimal 2 places over. So it would be 32 pounds and 10 pence right now. It was at this level before. It dipped because of bad results and the fact that it's no longer growing the way it was before. But it looks interesting to me at the very least. And if you'll see P ratio of 10, forward dividend yield of 5.61%, which is also pretty juicy looking. So I think it's interesting, I like it, but the mode isn't the greatest. Many companies can do that print on demand related things that and they have competition in every single vertical. It's not really like they're the only company that can do branded water bottles. In every single vertical, you have a lot of competition. You have a lot of people that can gobble up that market share. It also makes entering different markets a little complicated because there's people doing that in those markets too. A softer US economy could spell trouble, so if you think it's not going to do great, 4Imprint is not going to do great for now at least. And yet, the fair valuation combined with a decent dividend and great margins makes it a very tempting investment. So do you think the lack of moat is made up by the strong qualitative or quantitative metrics? And even if there's declining revenues, would you like to wait? That's kind of like where you start looking at how much you like the company and what the timing is there. In general, though, you have to pair the quantitative and the qualitative. What we're looking at here is quantitatively a very interesting company, but qualitatively speaking, it does have a lot of competition and their reviews may be good. I actually did a little bit of researching there, and I saw that in general, 4Imprint has positive reviews, but are they also able to enter new markets or grow in the US market further? Well, the devil's in the details there, and that's going to make the difference between this just being an interesting company and a big add to your portfolio. So, thank you so much. I hope this worked kind of as a primer there. And if you like videos like these, don't forget to like and subscribe. And if you want me to look at any particular stocks, please comment down below. I love doing viewer requests. Thank you so much once again, and have a great rest of your day.